Stocks drift lower after a strong start as Trump lifts the spectre on tariffs and domestic growth concerns linger. Realty and IT stocks gain while auto, utilities and healthcare are the big drags.
CNBC-TV18 learns that Cabinet has given its assent to waiving bank guarantees for spectrum awarded before 2022. This move is a significant relief for Voda Idea and a positive for Bharti Airtel Telecom stocks gain.
The board of Hindustan Unilever has approved the demerger of its ice cream business into a separate listed entity. The move follows a similar plan by its parent company Unilever after it reportedly shelved a move to sell the business to a private equity buyer.
Food delivery to QCOM major Zomato floats $1 billion QIP to beef up its cash reserves as competition heats up. The offer is indicatively priced at a significant discount to the current price.
And CNBC-TV18 learns the government is aiming to raise the FDI cap in insurance to 100% from 74% currently and may also introduce amendments to the insurance bill in this session of Parliament to permit composite licenses.
Good morning, good afternoon rather. You're watching us here on Halftime Report. I'm Mangla Malu. With me is Hormaz Fatakia. Well, the reason why we call it a morning and no difference between the afternoon is that if you slept till late and just got up, you wouldn't have missed much in the frontline index. The Nifty is down about 26 odd points. The Sensex down about 100 points. Remember, the frontline indices have seen big gains over the last two trading sessions. So some consolidation wasn't ruled out of the way, and that's exactly how it's played out. What's good, however, is that in this consolidation, the broader markets are doing a lot better. So we have the mid-cap index, which is up around 0.4% on an index level, and broader markets as well. We have 1,500 stocks advancing for about 900 stocks which are declining. And a couple of the sectors are actually picking up pace once again. This morning, we had identified FMCG as one such because of populist measures doing well electorally and perhaps some sort of expected improvement in the space as we see in the second half of this year, post-festive season, an overnight decline in commodity prices as well. So Asian Paints, Britannia, we have Nestle, which is higher. And from the broader markets, in the FMCG pack itself, Colgate is doing well, Marico, and we're also seeing some traction in names like Bata and Jubilant Foods. So a lot happening beneath the surface, Hormaz.
A lot happening beneath the surface indeed. And, apart from these crude sensitives, right, the one sector that I wanted to point out, though, was the real estate index. And that is continuing to move higher irrespective of the market. It's the 7th straight day of gains for the Nifty Realty Index, now trading with gains of close to 1%, slightly off the highs of the day, but well above the mark of 1,000 now for the third straight session, and it has grown. It's done very well in these last 7 sessions with gains of over 7.5%. But the subject that we want to focus on at the start of the show are microfinance institutions, and because they are tightening their lending norms, Abhishek is joining in with more on that.
Well, Microfinance Industry Network, that is MFIN, has tightened norm for the lenders with respect to strengthening the MFI operations as well as responsible lending from them. So, MFI sector at present caters to financial needs of nearly 8 crore low-income people. So, MFIN has tightened lending norms for its members, capped the number of lenders to a single client to be at 3 from the 4 that they had earlier, capped a maximum indebtedness of about rupees 2 lakh per customer. No lending to any borrower who is overdue of more than 60 days from his or her due date. So seek PAN for at least 50% of the borrowers for by FY25, and interest rate will be closely reviewed by the board members of the regulated entities. So these measures will come into effect from 1st of Jan 2025. Measures pertain to facilitating a responsible lending as well as prioritizing customer protection and promoting a steady as well as calibrated growth for the sector that is aimed by MFIN for the lenders.
All right, Abhishek, thanks a lot for that. We'll, carry forward this discussion with Alok Mishra, and you can join in on that one as well. He is the CEO and director at Microfinance Industry Network itself. Thanks a lot, Mr. Mishra, for joining in. Of these additional measures that you've announced, could you tell us currently what proportion of borrowers have for lenders, what proportion of borrowers have their indebtedness above 2 lakh rupees, and what proportion of borrowers have more than 60 days, per day, 60 days overdue indebtedness?
Yeah. So good afternoon, and thank you for having me here. So number one, the first point, data point is ready in my head, so I can answer that. So number of customers as per the credit bureau data, those who have more than three, or that is four or more lenders, is roughly around 5.9%. You can round it off to 6%. Now, number of clients having loans above 2 lakhs of all microfinance loans put together is also marginal into the similar range. Now, when you talk about portfolio at risk more than 60 days default, that is, we typically it will take 60 to 180. That would be somewhere in the range of 3 to 3.5%.
Mr. Mishra, Abhishek here. Will the reduction in loan growth not impact the borrowers because their flow will get impacted and it will be tough for them with respect to repaying their debts as well? And another one, if there is a cap with respect to lending from the organized segment, will they return to unorganized segment?
Well, very good question, Abhishek. So two things. Let me put things in perspective and allow me some time. Number one, when we are talking about not lending beyond 2 lakhs and not more than 3 microfinance lenders, we are talking basically about somewhere around 5 to 5.5% clients. And there also, we are not saying not lend. We are saying if the borrower has 4 relationships, for an example, if the borrower reduces 1 relationship and comes to 3 lenders, average ticket size in microfinance today is somewhere around 50,000. Around 1,50,000 loan from 3 lenders or 1,75,000 loans he is still able to get. So that's not much of a liquidity constraint. Only it is returning back to a little bit of higher credit discipline. And second part of your question is more interesting, that will they seek more informal sector loans? So, well, hypothetically, yes, but practically, no. Why practically no? Because when we go to the field and when we talk to the borrowers, after 15, 20 years, that is what microfinance has done in India, having touching 8 crore low-income clients, and if we take their household members, it goes to almost 35, 40 crores. It has demonstrated to them that formalized, legalized, regulated services at doorstep can be delivered with proper respect and proper client protection measures. And I don't think for reducing one lender relationship, they will go back to the informal finance. That is not our intention also. And practically, the gains which they have seen being associated with microfinance will make them come back to the sector by reducing their maybe exposure a bit. But I think they will not go back to the informal sector.
Well, how will you make sure that, the guidelines are followed by lenders with respecting, the cap or the, amount to be followed? Because at current levels, even with income of rupees 14, 15,000 per customer, the end use is not monitored. And I hear from lenders that, the money is being used to buy iPhone 16 Pro Max as well as other vehicles, which is not in productive cases, right? So the end use is actually a consumption loan and it's not been used to reproduce or be able to guarantee a repayment to lenders?
Well, Abhishek, if you must have been tracking the sector for quite some time, and there is an age-old practice and a term which we use in the sector which we call as LUC, loan utilization check. Generally, after 30 to 40 days after the loan is disbursed, the field officer is supposed to check that the loan is being used for the purpose for which it has been taken. And there can be some weakening in some cases. Plus, also, the LUC might not be, I cannot say that it is 100% foolproof. Even then, there can be some commingling of funds for other purposes. But let me assure you, by and large, these funds are used to invest in their livelihood businesses. But in case of emergency, if somebody has used 10,000 of rupees to pay for some medical emergency, I cannot completely rule that out. Maybe we are trying to strengthen the practice of LUC more. That is one. And the second part of your question, I think you asked about, I think I am missing that question. Other than the LUC, the loan utilization check, you said for consumption. And there was a second question also from the side.
No, how will you ensure or try to ensure
sure.
productive,
no, that's a very
productive use of the loans?
Yeah, productive. See, there are two parts to it. Now I get it. You said one is productive use. That is for the institutions to do a loan utilization check and ensure that it is used for the purpose for which the loan is given. And the second question which you asked in the start was relating to how will this adherence be ensured. So let me tell you that we don't, the sector body and SRO, we don't believe in just merely issuing guidelines and leaving it there. So we have various checks. We do data checks from credit information companies on disbursement. We do third-party evaluations of the member institutions. And all these things are captured, that are you adhering to the guardrails which have been prescribed or not. And let me tell you that in July we had issued one set of guardrails and the adherence has been quite positive from the sector. That is what our checks reveal. And these are data checks, empirical data checks.
So then, Mr. Mishra, the guardrails that you have put in place, do you think that it will ensure that the second half sees some improvement in the sector in general? Because the second quarter itself was a very painful one for a lot of these microfinance companies. What is the sense that you're picking up on the ground now that we are done with the better part of the third quarter, and do you see it improving going forward as we end FY25?
Yeah. Anecdote data, the final data which comes in from the Bureau is still to come in. I have only data till September. But what I speak to the lenders who are in the field and they get field reports, they say that November is better and there is some signs of stabilization. And what we read in the newspapers today, that the Kharif output has been a bumper Kharif output. The Rabi sowing has also started in full swing. And we hope that with this normalization and a kickstart in the rural economy, things should stabilize by January.
All right, things should stabilize by January. Two-part question then, Mr. Mishra. The first one, of course, is that you've given us data. You've said that, 3.5% of the MFI loans are more than 60 days overdue. So the overall extent of the problem should not be more than 3.5% as of the data that you have right now. I just wanted to understand from individual players, who would be the ones who would be most vulnerable to this, where their exposure is more than the industry-wide 3.5%, because I'm sure some would be above this 3.5% mean and some would be below that. So I would like you to call out some specific companies out here. And the second major worry is that while you're saying that things will improve from January, the street is worried about, is it too little too late?
Well, I would only say that some of the persons who follow the sector say it is too much too early. So and somebody is saying too little too late. So we have to strike a balance that we don't pull the strings too hard and at the same time ensure that the discipline returns back. Now, when you quoted me as 3.5%, I just gave a rough figure. That is between overdue between 60 to 180 days. It may be plus or minus 0.5%. I don't have the ready data with me. I could have given it to you. Second part is when you say that there can be ranges. Some institutions might be higher, some might be lower. So that is for individual institutions to tackle. But for us as a sector body, we don't see any such major deviation which is a cause of concern. Individual institutions are taking steps. And as we discussed with these new measures and as well as tighter underwriting norms, and generally, when we issue these guidelines, the focus shifts to lenders and all these things. But the other things which have been done along with that, that also needs to be taken into account, because the identification of client is a primary issue where overlending can happen. So that's why, because Aadhaar can't be used by the industry or the CIC, we have said that the voter ID, which remains as the primary ID for fetching the records, should be validated from the EPIC, that is the Election Commission data source. Right. And secondly, the sector has also decided to take on a mission mode, the seeding of PAN numbers with the client profiles. And today's newspaper said that now the government has also refined changes in the PAN number, wherein QR code and more authentic it will be. So with voter ID identified and that, we are also tackling other measures of the piece so that the sand doesn't keep moving and we are able to identify the client properly and dedupe it properly.
All right, Mr. Mishra, thank you so much for sparing time and joining us to take us through your views on the sector and the road ahead as well. That was Alok Mishra joining us on the show. Time for a short break. On the other side, Sudarshan will be here to talk about the Vahan registration data and whether there has been a slowdown in auto retail sales. Stay tuned, we'll be right back. Welcome back. Now, mixed signals are coming in from the auto sector in November, with two-wheeler sales growing strongly while passenger vehicle sales remain under pressure. Sudarshan is here with the details of the retail sales data for November so far. Sudarshan.
So it's the Vahan registration data, the all-important numbers that all the companies have been talking about. If you remember, after the Q2 results, most companies in their commentary did mention about that more than wholesales, the numbers that matter the most are retail sales. And taking the cues from there, we have here tried to analyze the Vahan registration data for the month of November. Let's see what those numbers indicate. In a nutshell, on the demand perspective, it's a continuation of what we saw in the month of October. Two-wheelers remain the biggest outperformer, followed by tractors, whereas demand for passenger and commercial vehicles remains muted. Now let's come to the numbers, and before we talk about that, do remember the comparison numbers are for the entire month, whereas for this month the data is for 25 days so far. So starting with two-wheelers, the pickup in rural demand seems to be reflecting in the numbers of Hero MotoCorp. Total registrations for Hero MotoCorp have already surpassed the numbers of October and are just 3% lower than November 2023. For TVS Motor and Bajaj too, the registration details are looking healthy, and the numbers are already at par with what we saw last month and are down just 4% and 11% respectively against November 2023. Royal Enfield, while it's currently underperformer amongst two-wheelers, but the data of last few months indicates that Royal Enfield sees a surge in registrations during the last few days of the month. The next in the list are tractor segment. Here too, registration trends are looking healthy with 5 days to go in this month. For M&M tractor, registrations are down less than 10% both month on month and year on year. And for Escorts, the decline is slightly steeper in comparison to M&M. It's down in the range of 15 to 17%. Shifting to the segments where demand concerns remain are passenger and commercial vehicles. With only 5 days to go this month, most companies are seeing sharply lower registrations. The numbers are down in the range of 40 to 52% month on month and are down 21 to 40% year-on-year, with Maruti and Tata Motors looking the weakest. Before ending, it's important to remember that the comparison numbers both month-on-month and year-on-year cover the full month, while the current data for November represents only 25 days. This gap means significant changes could still occur in the remaining days of the month.
Take that point, Sudarshan. Thanks a lot for that. Auto retail sales, are they slowing down or not is the big question. We'll keep an eye out on that as we progress through the end of November, and then obviously the last month, which is seasonally the weakest for auto sales itself. Take a short break, come back. On the other side, we focus on the primary market action. We'll get you excerpts of the conversation with the management of Suraksha Diagnostics ahead of their IPO. Welcome back. You're watching us here on Halftime Report. A bunch of stocks. Now, the market's cut has actually deepened to about 70 points, and that cut has been led largely by a couple of these heavyweights. So pull up something like an L&T, which is at the low point of trade. We've been talking about how, some of these auto stocks, Sudarshan just spoke about how the sales have weakened. The stocks have weakened too. Tata Motors is at the low point. We're seeing some weakness in names like Bajaj Auto and Hero MotoCorp as well. And Trent, after seeing some traction on the upside yesterday, is seeing some profit making today, so it's currently at the low point of trade. We'll watch out for all these stocks. But amidst this, the broader markets are doing a lot better, and Emcure Pharma is one of the stocks which is higher in today's trading session after a brokerage upgrade. Vamakshi joins in with more details.
Well, Mangalam, the stock is surging on the back of a brokerage note that came in from Kotak Institutional Equities. They say that the company had a decent first half of the financial year 25, and they're expecting a pickup in the second half, especially the organic growth. So largely what they're saying is that they're expecting 9% year-on-year growth in the second half as compared to 6% that they saw in the first half, and this growth will largely be driven by an upbeat prospects across India, Canada, as well as the rest of the world. Now, this organic growth coupled with the in-licensing deal with Sanofi, consolidation of Mantra, as well as with most of their legal challenges now behind them, they are expecting overall sales CAGR of nearly 13% from FY24 to 27. In fact, over the same period, they're expecting 18% EBITDA CAGR as well as 29% EPS CAGR, and this would largely be driven by improved productivity as well as better utilization of their new facilities. Now, the stock has seen a fair bit of correction from recent highs, and post that, they've gone ahead and upgraded their rating on this counter from add to buy. They've given a target price of 1,680 rupees per share, which implies roughly an upside potential of somewhere around 20%.
Vamakshi, thanks a lot for that. But two other stocks that are in focus, which is BHEL and Hitachi Energy, both of them are surging in today's session after securing the Khavda-Nagpur project from Power Grid. Tell us more on that.
Well, absolutely, Hormaz. This was an order win that was really anticipated by the street. The street was waiting for this order win to come in, and therefore we're seeing both of these counters surging in trade. Let me quickly take you through the details. Now, this is a consortium of Hitachi Energy as well as BHEL that has won an order from Power Grid. This order is to design and execute 800 kilowatt, 6,000 megawatt, 1,200 kilometer HVDC terminal stations, which will transmit renewable energy from Khavda in Gujarat to Nagpur in Maharashtra. And this project is expected to be executed by 2029. In fact, there's a note that came in from Nuvama, especially on Hitachi Energy. Overall, they estimate the project cost to be somewhere around 25,000 crores, and out of this, nearly 4,000 to 6,000 crores of order inflows are expected for Hitachi Energy from this project alone. In fact, the company is also sitting on its highest ever order book of 8,910 crores, and this in turn provides revenue visibility of somewhere around 24 to 26 months. Now, keep in mind that there are several more HVDC projects that are lined up, given that the government has a target to meet 500 gigawatts of renewable energy evacuation by 2030. So this bodes well for Hitachi Energy as well as BHEL. For now, Nuvama has a buy rating on this counter, target price of 16,500, implying a 33% upside. But this order win, very big for BHEL as well as Hitachi Energy.
All right, we take that point, and that's why Hitachi Energy is up around 6.5%, BHEL up around 1.2%. The overall order book scheme of things, it is a bigger contribution to Hitachi as against BHEL, even though, you know, the share is not what we know about right now. Suraksha Diagnostic, let's talk about that one. A full service and integrated diagnostic chain headquartered in East India will launch its IPO on November 29th. The price band for the IPO has been set at 420 to 441 rupees per share. And they're looking to raise about 840 crores via an offer for sale, where the promoters will bring down their holding to 50%. Rima caught up with Somnath Chatterjee, who is the joint managing director, and Ritu Mittal, who's the joint managing director as well, and CEO of Suraksha Diagnostics, began by asking them about the promoter pledge post-IPO. Listen in.
So this is the first opportunity for long-term investors to have some monetization. They've been invested in the company for 32 years now, and also for our private equity fund, which is OrbiMed, to dilute their stake. They will still continue to hold 10%.
Okay.
And Dr. Chatterjee and myself, we had borrowed some money to buy more shares of Suraksha. So we want to pay off that debt. That is one of the conditions. In a liquidity event, Suraksha, we have to pay off the debt.
So the pledge today is what percentage?
Is around 40%.
40%. And with this, you know, the fundraise that the promoters are doing, the pledge comes down to zero?
Absolutely.
Okay, fantastic. And what about the debt and the cash in the books right now? Because there is no fresh issue.
So there's any negligible debt in the book?
Single digit?
Yes.
Okay. And the cash?
Cash is around 50 crores.
50 crores. And every year, say in FY24, what is the kind of cash that you've generated?
FY24 would be around 45 crores.
45 crore, okay. Now let's talk about the kind of growth rate. Now, if I look at it from FY22 to FY24, there is a drop in your revenues, but that's because FY22 had the benefit of COVID. If I strip out the non-COVID revenues for you, have seen a growth of 21%
Yes.
from FY22 to FY24. Is that sustainable, sir?
That is highly sustainable, and we believe that going ahead, we will be able to maintain this rate of growth, if not better it, because there is a growing idea amongst people. If you look at the figures, then the rate of growth in the organized sector of diagnostics is growing very fast. One of the principal reasons is post-COVID, people have become a little more sensitive to branded diagnostics. So we believe this is not only sustainable, but this can even increase ahead.
Okay, so you're confident about maintaining the 20% kind of revenue growth, if not better it. What about margins? Margins for the company have also expanded. 29% in FY22, scaled up to 33% in FY24, and further to 35% in Q1. What is driving that?
It is basically the economies of scale that is driving it. So as we are expanding, our margins are getting better because the fixed costs are just getting divided.
Okay. But so how much more can you expand your margins from here on?
So we think we can go up to 40 to 42% EBITDA margins.
40 to 42%. Okay, fair enough. You spoke about market share. I think your market share in East India is 1.15 to 1.3%. Who are your large competitors in the region, and what is the headroom for growth in terms of a market share?
So when we talk about the market share, East India is a pretty huge market, and we are present in a very concentrated geography. If we were to look at our market share in those geographies, it would be much higher than 1.5%.
Okay.
And we have a huge runway to grow because there is hardly any competition in the geography that we serve.
So in West Bengal, what would be, which is your core market, what would be your market share?
I think it would be around 10 to 12%.
10 to 12%. Incredible. Okay. But you also have plans. I was reading your July 16th, the strategy board meeting which took place, has spoken about strengthening position in the core geography of Kolkata and the rest of West Bengal. And secondly, expand beyond the core market in adjacent geographies of Eastern and Northeastern India. So today you have 49 diagnostic centers. What would you like to take this number up to? And what are your expansion plans?
So we would like to take this number from 49 to around 100 in the next 3 years. We would definitely be focusing on West Bengal because there are still some districts which are uncovered. We would like to set up a hub and spoke centers in these districts while catering to the rural population through our channel network. And we would like to expand to Northeast India first because that is very underpenetrated and underserved. So that's the plan that Suraksha has in future. And then we would, of course, expand to places like Bihar, Orissa, and Jharkhand.
Okay,
If you look at it, then you will find that Eastern India has the lowest number of NABL accredited labs. It also has the lowest number of NABH accredited hospitals, though it has 28% of the country's population. So the headroom for growth in East is enormous. And the paying capacity in diagnostics, if we compare, matches with the premium segment. East and West pays the maximum, South being lowest and North coming after that.
And what will be the kind of investment you will need for this?
So typically the investment every year that we have calculated is around 70 crores.
Okay.
And it'll all come from internal accruals.
In expansion, we would also look at acquisitions. If acquisitions can be made in newer emerging verticals. Also, acquisitions, if they come at a healthy price line, then Suraksha is open to acquire diagnostic centers in the East.
Are you evaluating any
Yes,
options?
We are definitely evaluating.
I think the last acquisition was in 2020. So do you think the next one could happen in the next 12 months? I mean, how close are we?
We are very close.
Very close.
We are very close.
Okay. And you don't need funds for this? Your internal accruals are...
We'll
So
take
typically
care.
when you go ahead and acquire, say the last acquisition, what is the kind of money that you spend to acquire a center, a branded center or trusted center?
So I think we acquired 2 centers at a cost of around 4 crores.
Okay. So it's not very...
It's not, yes.
You know, one of the challenges, because we have a few listed players now in the markets, and one of the core challenges for diagnostic companies has been, the inability to raise prices due to competition from online players. Can you tell us what your experience has been and what is the kind of competition that you face from online players?
Well, there was a lot of talk about online players. We haven't actually faced on the ground any competition from them. Neither have we lost our dominant position to any one of them.
I read somewhere, and I'm not sure if it's true, but for the industry per se, the average selling price has been stagnant for the last 3 or 4 years. Is that true?
No, for Suraksha, we raise our prices around 3 to 4% every alternate year.
Alternate year, okay.
Yes.
So this year also you've done a price hike?
We typically do it in December.
Okay.
So we will be doing it again in December.
Okay.
Suraksha Diagnostics, they're heading to the primary markets. Time for a short break. Up next, Vinay Rajani of HDFC Securities joins in with some trading strategies and a chart check on the market. Stay tuned, we'll be right back. Welcome back, and let's get you a quick chart check on the markets now. Vinay Rajani of HDFC Securities is joining us on the show. Vinay, good afternoon. Thank you so much for joining in. What are your views on the index now that we are seeing some bit of consolidation after this 2-day up move that you're seeing? Would you stay on the sidelines or use this up move to reduce positions? What's your view here? And couple that with your stock recommendations as well for the afternoon.
Yeah, good afternoon and thanks for having me on the show. So yes, from the low of 21st November, Nifty has risen more than 1,000 points. And for last 2 trading sessions, we have been witnessing some consolidation happening. And this consolidation is happening because of some technical reasons also. Yesterday's high and today's high is almost same, and it is around its 50 days exponential moving average resistance. And there has been some call writing happening at 24,400 to 24,500. So after a positive news, markets are trying to consolidate. And yesterday we witnessed a gap up opening in the Nifty, and that gap range is placed in the range of 23,950 to 24,100. So it might happen that for the time being Nifty here consolidates or correct a bit. So we can expect a correction towards 2400, 24,100 could be a lower support, and which is a gap support also. So I'm expecting markets to consolidate here, and stock specific action could be seen in the mid cap and small cap space. So for a time being, I'm expecting some running correction towards 24,000, but again at that level market will remain attractive, and at that time one can initiate fresh long position. So at dips I'm recommending to go long in Nifty, and the dip support level is around 24,000. As far as stock recommendation is concerned, we are bullish specifically in Chola Finance. So Chola Finance has started moving up and has got some momentum back into it. So the Chola Finance is trading at 1260. So there has been some positive divergence, and stock has seen a healthy correction from the recent swing highs, and it looks attractive technically. So Chola Finance can be bought at 1260. I'm recommending a trading stop loss at 1240. On the higher side, I'm expecting a target of 1290. The second pick I would like to take is from the defense space, Bharat Electronics, that is looking very strong. So Bharat Electronics 298 is the price, 293 is the stop loss. On the higher side, 308 should be the target.
All right. Thank you so much, Vinay, for joining in and giving us your views on the markets as well as individual stocks. We'll wrap our equity coverage on that note, take a short break, come back on the other side. Manisha Gupta joins in, and she'll be discussing the bullion and jewelry space with Surendra Mehta, who is of the India Bullion and Jewelry Association. Stay tuned.
Joining us on the show now is Surendra Mehta, Secretary at the India Bullion Jewelers and Association. Mr. Mehta, thank you so much for joining us. And it gets as volatile as it can with the gold prices. 5% of gains in the previous week and 3% down overnight. One, how do you read this? We do understand that it's day-to-day events which really seem to be impacting gold. But what does it really mean for an average investor or a trader?
Well, Manisha, absolutely roller coaster ride. In last 1 month, from $2,790 in the spot market to $2,536, then back to $2,721, and now almost down to $2,600 dollars. This is only because of as usual, we have seen whenever Trump gets elected, he flashes some news, and that creates the absolute roller coaster ride. in the gold market. And this we are now witnessing in we have witnessed in last 1 month. And this would continue till he joins. And even after he joins, I don't know what best he can do, because he talks of cutting the interest, cutting the tax rates. He's talking of sanctions. He's talking of tariff on China's import. So the current look at the current debt to GDP ratio in US, it is 125%, and some experts believe that it can reach out to 200% in some times. What happens? The average American is shouldered with a burden of $108,000 debt. Now, that kind of a situation exists in US. And yes, the gold prices can move in a little bearish mode for about a month or so. It can go down to $2,595 first support level, and second support level to $2,524 in the spot market. But overall, I see gold will remain bullish, because if the sanctions are placed on China's will start buying gold, because their manufacturing facility will suffer. If the US debt to GDP ratio keeps rising, then even US will have to start buying. The central bank in other countries will start buying gold. So I think gold for a longer term still remains bullish.
All right. So as you said, near-term supports are in place. If those hold on, then long-term trend is still on the bullish side. Mr. Mehta, what's the buying trend like in the Indian markets? I mean, we have wedding season ongoing, which will continue for the month of June as well. What kind of numbers are we looking at, one? And two, what's your sense on the imports into India for gold at this year?
Well, I think because of the falling gold prices, and the wedding season, we have almost 65% population which is below the age of 35, and at least 50% population which is below the age of 25. So there will be a lot more weddings in our country, at least for the next 10-15 years. So gold, as usual, Indians buy gold during wedding season and any other festivals. So this year also we are seeing a phenomenal rise in the gold buying, especially in the last 1 month, and this would continue. And I believe that we will be crossing 750 tons of last year import in the current.
All right, Mr. Mehta, thank you so much for joining in and sharing with us your thoughts on the road ahead for the gold prices and for precious metals as well. Manisha, thanks a lot for joining in. Time for a short break. More on the markets and specific stocks on the other side. Welcome back. Some selling pressure coming in for the index at the higher levels. The Nifty is now down significantly from the highs of the day. It's down almost 160 points. The dip is now getting bought into, at least slightly, as we speak. It's a slight recovery from the lows of the day as well. The Nifty Bank 2 down 400 points from the lows, but it remains to be seen whether this dip that has come in gets bought into on a sustained basis. We'll pull up some stocks as well that are doing well in today's session. The PSUs, JP Morgan came out with a note today on BEL and HAL, both with an overweight recommendation. Both are off the highs of the day, but still trading with gains of around about 2% each. BEL is up 2%, the 340 rupee target. HAL 2 up 2%, is a 5135 target, which is below its record high. And also pull up Garden Reach Shipbuilders. That one is continuing to move higher, was up around 8 to 9% yesterday, is up another 7% in today's trading session as well. 1550 now for Garden Reach. But with that, it's a wrap on this edition of Halftime Report. Business Lunch comes up next.